China's stock market has exploded over the past week, with the Shanghai CSI 300 rising 25% over the past 9 days. And for some investors, it's really paying off. That's Michael Burry, who accurately predicted the 2008 financial crisis and was made famous by the movie The Big Short. And he seems to have done it again, buying Chinese stocks before this round of stimulus. But some media are calling it what it is, a stimulus rally. You see, China recently rolled out a load of stimulus measures, including cutting the reserve requirement for banks by 50 basis points, which is pouring money into the economy and boosting confidence, which has sent the stock market flying. There are probably YouTubers in China churning out endless stimulus videos and getting rich right now. Remember that trend from 2020? But the government only has to do this because China's economy is actually in really bad shape. So how bad is it? And could China be about to head into a recession in 2025, taking the whole world with it? Hey financial warriors, welcome to the show. I'm Ben Hedges and this is my second channel where I cover more business and economic related topics. If you like the sound of that, please subscribe for more videos like this. So what is actually going on with China? Well, after their insane lockdowns of 2022, which were so strict that people were locked in their homes, sometimes even with the doors to apartment complexes welded shut. Yeah, it wasn't like in the West where we were going for hikes, dining outside, and the only inconvenience was that you had to wear a mask. But not if you were eating, since the virus doesn't attack people who are eating.
Excuse me, sir, you're gonna need a mask.
Yeah, but I'm eating.
Okay, that's fine.
No, people in China were locked indoors and had to resort to fishing with drones from their apartment complex's koi pond just to survive. The harshness of the lockdown suggests that a lot more people in China passed away than we know about. Here's a chart of COVID cases made with official data from China. Like, what happened here, people? I guess they only started to admit that there was a problem by 2022 when it became too noticeable to ignore. So there may have been many more deaths and certainly a lot of businesses shut down too. And thus when China came out of lockdown at the end of 2022, there was never that big rebound of consumption like we had here in the West. Demand for goods was not what it used to be. And in fact, China's economy has been in the dumps with domestic demand down and the government trying to lean on manufacturing and exports to drive the economy. But there is discussion that China could enter a much longer period of stagnation and deflation like Japan experienced over the past 30 years. Many sectors in China have been struggling, with manufacturing contracting every month except for 3 since April 2023. The US cut China off from advanced semiconductor technology. Bank loans in China have shrunk for the first time in 19 years, with property prices also slumping and many real estate developers saddled with debt that they cannot repay. Evergrande is a prime example, with China's banks still exposed to risky property assets. In fact, China's real estate crisis has wiped out $18 trillion in wealth, and many households are now choosing to save their money instead of spend. The government is trying to revive the property market, which had been a sure bet throughout most of Xi Jinping's reign as leader, but is now struggling to get back on track. China faces the opposite problem that the US has had over the past few years. It is facing deflation, or prices going down, not up. One example is that when too much steel was produced in China that the domestic market couldn't buy, that forced prices down. Then when some of that steel was exported, it started bringing global prices down too. So guys, the point of this video is kind of a warning to investors. Although yes, there has been a rally in the Chinese stock market over the past few days, the stock market does not equal the economy. And China has many serious problems that are going to linger for many years and take a long time to fix. Michael Burry saw an opportunity in Chinese stocks due to their overall cheap price compared to US stocks. But that does not mean the economy is in good shape or that the rally will continue. Do not think that this is China's big comeback. We need to call it what it is. It's a stimulus rally. There could be more stimulus to come, but the fundamentals are not strong and there are a lot of hard to resolve problems. Luckily, the West isn't as exposed to China's economy as it used to be, and I am certainly not going to be investing in Chinese stocks. In my opinion, history very well could repeat itself and China could enter a Japan-like period of stagnation. But guys, the good news is there are still a lot of opportunities out there. And if you are interested in investing in stocks, I would recommend US stocks. That's what I invest in personally. So do check out Webull, the sponsor of today's video. You can get 20 free fractional shares with a qualified deposit, and 6.25% APY on your uninvested cash when you open a new account through my link below. Please also subscribe to the channel if you're new. We'll see you next time. Bye-bye.